of commercial at Dubai Commerce City.
Hello, hi everyone. Very good to meet you all. My name is Mitch Petermann. Thanks so much, Arjun, for connecting me. I hope you can see my screen all right.
Yes, Mitch.
Perfect. Okay. Yeah, thanks so much for giving me the opportunity and talk a little bit more about Dubai Commerce City. I try to keep it short and brief because it's not about Dubai Commerce City, but about all the other topics which Arjun just mentioned. This is just to set the stage in a bit. So who are we? We are the region's first free zone dedicated to ecosystem and digital commerce. It's a 1 billion US dollar investment developed by one of the first free zone operators in the Middle East, which is DAFSA, which you guys probably have heard of. And why we are different, I would say, compared to other free zones is as well, if you look at our experience. If you take someone like an Arjun, for instance, he did not grow up working for the government. Same like me, I worked for a brand before, and all of us, we come from different stakes of life, but very well known in how do you scale business and how do you scale business globally. Here you can just see a snapshot of Dubai Commerce City. That's the aerial view. It's around 200,000 square meter. You have your offices, you have your retail space in the middle because people need to eat, as well as the warehouse. And warehouse is very important. Why? Because it's a fenced free zone. That means any product coming into the free zone or going out of the free zone, first of all, no import taxes. That's very important. That's why it's so good to be in a fenced free zone. The other thing is there is a connection directly to Dubai Customs, a blockchain solution, which means everything goes in and out automated, which you require when you want to do tons and tons of e-commerce shipments in a very short amount of time. What do we have achieved in the last 4 years? So I always come up with the story and not come up with the story, but telling the story when I arrived here 4 years back. It was literally 30 clients which we had, right? Now, if you look at it, 3, 4 years down the line, we are more than 520 companies which we have in Dubai Commerce City. You can see more than 50% of the companies are actually doing e-commerce. And a lot of companies say like, only chasing the big guys. Actually, only 10% of our companies overall are MNCs. Why is that important? Because our focus is on startups. Our focus is on companies who have new ideas, founders coming in, and we help them to scale. Yeah. And then you can see on the right, you can see a little bit in terms of e-commerce orders, how much coming in and out. And this is what we have accomplished so far within the past 3, 4 years since we are operational. What do we offer? We are free zone after all. So you get your lease, you get your license, you get all the usual stuff which other free zones do. But our focus is a little bit more on the ecosystem, which I will explain in the next slides. We are also happy to share these slides afterwards in case anyone is interested. More than happy, so you can go through in detail and ask questions if you have any. So, ecosystem approach, what does it mean? The first thing what we realized when we came here, ecosystem a little bit like a family, yeah? Tell me someone who don't want to be part of a family. It's probably very difficult to find someone, yeah? So we realized companies coming to the UAE, setting up business over here, yeah, they need a lease, they need a license, but they need so many other things. They need to open a bank account. They maybe need a fulfillment partner. They have a great product and a website, but they don't know how to run marketing for it. Maybe someone needs to build a website for them. So what we said is, you know what, let's bring all these people together and collaborate. That was the main approach to say, like, you know what, everyone just, put them together, introduce them to each other, and you have a platform already. The whole idea would be that it becomes more efficient. If you're a new company coming, I don't encourage you to set up a marketing company or supply chain company if you have a cool product. Focus on your product. That's your core, right? The other one, we have amazing partners, our tenants as well, who can help to provide the service, probably at a better quality in the service level that you could do it when you build it your own because it will just distract of what you're trying to build. Market access and expansion, of course, companies come over here. That's the main reason. They want to get not only access to the UAE, but to the broader GCC or even MENA region. And the most important and overlooked part is long-term sustainability. So I know everyone puts on LinkedIn, hey, I set up a company in Dubai. We're live in Dubai now. Yeah. They probably will not put a post after 2 years when they shut down and said, oh, it didn't work. Yeah. The most important part is really not to set up a company. You have across the UAE, you have like more than 40 free zones who can help you to set up a company. That's not the challenge. The challenge will be for you, for your company, how can you build something which generates revenue, covers your cost over the years to come? And this is our whole focus where we said, you know what? We don't want people to shut down after 2 years because putting a lot of energy in it, setting them up, then closing them down, it's not very efficient for anyone. Altogether, with our existing client base of what I showed you is we have more than 30 active partners, meaning they're providing services actively out of our free zone to the other tenants. Alone this year, we have already generated, that is 200, which was in 2024. Alone this year, we already did over 300 collaboration opportunities. What does that mean? One tenant doing business with another tenant. Yeah, creating value, creating revenue, creating service, right? Which is, I think, a very good starting point for us. Let me just see how I can switch off the audio. Now, let me just put that on stop. That's all right. We don't need to show the video. So here, just to give you an idea, what do we do? So on the left, this is a company called Socially. It's a marketplace. You all guys, you know, obviously TikTok Shop, right? People go on the platform, they see a video, they like it, they have the option to buy directly in the app, right? This is nothing else. So this guy set it up over here. Company is called Socially. It went through the roof. Within the first couple of months, they almost had like 1,000 consumer orders a day. Great thing is we set them up with an office, we set them up with a license, but then the guy called us and he said, you know what, I have amazing news. And we are like, and I have some bad news too. And we're like, what's the amazing news? I'm 8 months ahead of my business plan. And I was like, yeah, what can go wrong now? Yeah. And he said, tomorrow I will be bankrupt. And I was like, what do you mean? And he said, all the products which I'm selling on this platform, I financed myself. I carry the inventory. And that is obviously quite some challenge because the faster he grows, the more money he needs to throw into inventory to keep it running, right? So we set him up with Oracea Capital, which is obviously one of the investment arms under the same government entity as us. We also had one brand, Sisley. It's a French cosmetic brand. They are in Dubai Commerce City. They had challenges with Saudi. These guys were amazing, doing amazing sales in Saudi. So we just said, like, you know what, connect them. Why don't you do business with each other? One seems to have cracked already how to get consumers there. The other one have a good product. So they start selling on it. And then last but not least, we had the guy was doing the fulfillment out of his office, which is strange enough. But you know what? Once he hit 100 orders a day, it became challenging, obviously. I mean, sorting this all out. So he said, I really need to outsource it to a good partner. Nakel Express, owned by Saudi Post, also one of our tenants. And we connected it to them and said, why don't you outsource directly to a Nakel and you can scale it to thousands, 10,000s, it doesn't matter. These are the guys who can help you. So all of this gives you an overview of where we are helping not just on one piece, but we really try to cover the whole end-to-end value chain. What else do we do? So one thing is, and this is even Arjun would probably be the one because he's the initiator of this process or of this project where we said, you know what, we have so many companies coming to us now and say, you know what, it's incredible, your ecosystem, let us be part of it. So we said, you know what, let's work on a partnership model where we actually have outside companies coming to us, being able to enjoy our community events, being able to connect to our tenants. We have an app now, which we just put out there. 6,500 people have access to the app. So just imagine you can use your product and sell directly on that app for a product, for service, whatever. So it's all about partnerships and getting them access to our ecosystem. So we just signed it up roughly 3 months ago. We have more than 30 people who already signed, companies who signed up for it, right? So that seems like the community is growing even further. To give you an idea of what we have in terms of tenants, again, we have 10% are MNCs, and I consider the ones of like the DHL, the Avatos, right? We have BYD, obviously the fastest growing automotive company in the world. Now everyone would say like, hey, but wait a minute. Why? These are not e-commerce guys, right? It's about ecosystem as well. So that means in an ecosystem, it doesn't help if I only have companies who build platforms. I need companies who have a product. I need companies who offer services. I need companies who do all kinds of different services because all of this together builds an ecosystem, right? So here you can see a lot of the companies we have. We have some very interesting models. In the right on retail e-commerce, you see Luxury Promise. This is a lady super interesting concept. She sells pre-loved, so used Birkin bags from Hermes, which are one of the most expensive bags in the world. It starts at 100,000 dirham retail price. And she auctions them on her Instagram channel. She has more than 1 million followers, and she sends it from Dubai Commerce City to the whole world. And imagine with 100,000 dirhams a bag, no? She has 50 of these bags, 10 of these and whatnot. And it's just growing. And why does the model work? How do we see that it works? This lady just signed up and she's doubling her space with us, which I think is great news. Yeah. And she has all her studio, everything together in one place. So community, what do we do? So I think a little bit of the secret sauce, and this is where everyone in the team is supposed to also work with us. And it's not just Mitch and Arjun talking to people, but the whole team has the mindset. It's C Club events, yeah. So every 3 months, formally, we meet up with all the CEOs from the different companies. We invite them, we introduce them, we introduce the companies who set up freshly just to connect. We do a lot of tenant activations. As you can see here, we have now a holistic gym where all our tenants can use the gym at a preferred rate. We're doing founders events. That means like we bring people with great ideas, but not so deep pockets, together with hopefully some sugar daddies, and there's some successful marriages being built. Yeah. Trade organizations, and that's interesting because a lot of these trade organizations, they're connected to companies from overseas. It's all about foreign direct investment to bring in seasonal events. This Friday, we have a Christmas party, and if any one of you is interested to come. And then we have country delegations. We had from Vietnam, we had from Indonesia, from Kenya. So the interesting part is they heard about this Dubai Commerce City model, and they are like, you know what, we would actually like to replicate that in our own countries. And I think this is a little bit like the future vision or whatever for us, where we're saying, like, you know what does it take to franchise this concept? Where we say, you know what, let's have a Bangkok commerce city, since it's my favorite city, and let's have a Dublin commerce city. And you know what, all of this is a global commerce city network where people can actually get the same process, the same service, the same systems, same everything, right? So that's the next level which we're aiming for and what we're striving for towards in the future. This is, again, I should not be the one even telling it because it's Arjun's baby, but we set up WorldDev roughly 14 months back. The next one is coming in February next year. It's an event where we bring together government, we bring together brands. It's the biggest e-commerce event here in the UAE, in the region, actually. So the interesting part is we're not just be another Seamless, another North Star, whatever. No, for us, we want to marry government and private companies, sit together, discuss about business, discuss how the government can help companies to strive here in the region. We had in the first edition already 8,000 people. We had more than 120 booths over there, sponsors. Next one, as always in Dubai, is going to be bigger and better. We have more than 10,000 people coming. I think, Arjun, we have already around 140 booths, which we have rented out. We now have country pavilions, like a German pavilion, Indian pavilion, where we make it even more concise and bring people together. So that's also for us, but this is just one event. I just checked with my marketing team. We actually had more than 100 events this year. Can you imagine 100 events? I keep on saying, like, marketing team, what are you doing? But they're actually busy with organizing events. It's not the scale of a WorldDev, but it could be something small, something around sustainability, something around AI. We do a lot of AI topics, right? So all of this to build a community. And I know there was a lot of words, but I hope everyone enjoyed it. I hope I stayed within the time frame, Arjun. And yeah, back to the team. And if you have any questions, I will be staying in the call until the end.
Thanks a lot, Mitch. I mean, that was a really nice presentation, and I think the biggest takeaway from that is, and again, speaking as someone who has worked closer with you, building this together, Dubai Commerce City, I think our main value proposition is building that community and the ecosystem. And that's where we say we are more than a free zone. We're actually a community and an ecosystem. And look,
Yeah.
even this initiative that we have started with the webinar, it is about growing the community and sharing the knowledge that we are trying to build together, right?
Yeah, absolutely. I always say, and you're aware of it, né? I always say, like, I need to be careful whether anyone is listening from our bosses, because I would not even say we are a free zone. we would rather say we are a community and we have free zone capabilities. Because for us, the main focus is really on the community aspect and on the ecosystem aspect of things, right?
That is absolutely
Yes.
true. Thank you. Thanks a lot, Mitch,
Sure.
for sharing this information. And I'm sure if there are people in the audience who has some questions, feel free to drop in the questions. We will take your questions at the very end. And if we are not able to answer all your questions in this session, please note that we will definitely get back to you with an answer. Okay, moving on. Now we turn to a topic that's going to impact every business in the UAE, a shift that's not just procedural, but it is also transformational. Yes, I'm talking about e-invoicing. E-invoicing, we all know it's announced, it's arriving soon. It's reshaping how organizations operate, integrate, and more importantly, stay compliant. To guide us through what to expect and how to prepare, we have Mr. Ponson Hansen from Thomson Reuters. He heads e-invoicing for Asia and emerging markets and brings a wealth of expertise to this conversation. With that, over to you, Mr. Hansen. Let's dive in.
Thank you very much. Good to meet you all. As you very much pointed out, e-invoicing is on the rise, not just in the UAE, but globally. We're seeing more and more authorities and governments all over the world introducing new e-invoicing mandates in order to get better control over their tax revenue, and ensuring full compliance with that is going to be critical for any business operating within the broader region. Now, I'm trying to see how we can get my screen to share so I can show something, or do you have the presentation up on screen yourself? No? Okay, let me try, and we will move onwards.
I think it's better for you to control so you can pace it according to your, like how you're
Absolutely.
and presenting, right? Okay, there you go.
Now we're talking. All right. So to start things off, the UAE will be introducing e-invoicing as a mandatory requirement from 2026 and onwards. And the timelines here, depending on who you are in the audience, is going to be critical to keep track of. So first of all, Thomson Reuters and previously Pageros have been accredited already. That was happened in 2025. We were the first ones to become accredited, to act as what's known as an accredited service provider. You will hear the acronym ASP floating around more and more as you get used to e-invoicing. And what is happening here is that by July 2026, any business that have a revenue above 50 million dirhams a year must have appointed an ASP. And from there on, i.e. from March 2027, I believe it is, they must issue all consequent e-invoices through the e-invoicing system. So what is the difference between an e-invoice and a regular invoice, you might ask? Is it a PDF that I'm sending over an email? That sounds electronic to me. And no, that's not the case. An e-invoice is a highly structured format and document that is exchanged over a regulated network. Dubai, they are applying the global standard of PEPL, or I'm sorry, the UAE are applying the global standard of PEPL, which has already been successfully deployed in many countries throughout Europe, as well as Singapore, Australia, New Zealand, and so on. And what that means is that you need to have a node, a technical partner through which you issue your documents, and they will in turn communicate with the buyer's node. And these are all known as corner 2 and 3, 4, and 5, and so forth. But you need to have one of these in order to issue and receive your documents back and forth. Now, if you don't hit the revenue requirement of 50 million dirhams, don't lean back and think that you're exempt from the requirement. You only bought yourself a little bit more time. So as a matter of fact, by October 2027, you will need to, or sorry, July 2027, you need to have appointed an ASP, and you will need to be going live thereafter in October 2027. So this will hit absolutely everybody. regardless of what ERP systems or software you're currently using, you must have an ASP. Now, to go into a little bit more about this as well, as I mentioned, these are known as various corners. So the issuer of an invoice is known as corner 1, and they need to have an ASP, which is known as corner 2. A recipient of an invoice is known as corner 4, and they need to have an ASP as well for corner 3. The critical part here is that if you're both sending and receiving documents, which are both part of the mandate, so it's not sufficient that you only issue documents, you need to be able to receive them through this process as well. You need to do this through the same service provider. So essentially, for you as an entity, corner 2 and corner 3 will be the same, if you will, but your buyers and sellers, they will have different service providers and how they interact. Essentially, how this works is that you will be issuing a document. It goes through to your ASP. It will then route that to the corresponding corner 3 ASP so that the recipient can get it. And as part of that, this will feed the authorities with the relevant tax data reporting and so forth. So corner 5 won't be involved in your direct exchange, but it will feed information to it. Now, as I mentioned, the UAE are not the only ones that are introducing mandates. You can be on the horizon or can have a look out at the horizon if you're already operating across multiple countries. Throughout the MENA region, you're looking at Qatar, Bahrain, Jordan, and others who are all introducing mandates as well. Previous countries that have already introduced them include the likes of Saudi Arabia. And this will continue to increase. So if you're operating across multiple countries, take that in mind. Now, what does this mean in terms of what you need to do? First of all, make sure that you lock in the date and scope of when you need to be compliant in the region. Sounds simple, but getting the right stakeholders, depending on the size of your business, can be a challenge sometimes. So make sure you lock this in and start looking at it already to determine when you need to go live. As you can expect, even though there might be 5, 10, 20 various service providers that can cater to your needs, ensuring that you're going live on the right date, a year is not that long time. And at the end of the day, when it comes to IT projects, so because you're going to have to get the stakeholders involved, you're going to have to ensure that you have the technical prerequisites to do it. And by the end of the day, you're going to be cutting the line very close unless you start preparing already. Second, determine the accredited service provider. I will, of course, recommend you to work with Thomson Reuters. We are the best. But do your market diligence to see what suits you and what works for you, and make sure that you have this in accordance to the timeline set out by the authorities. And lastly, make sure that your various stakeholders have been included so that you can generate the correct information and ensuring that you can do the full end-to-end testing before you go live. So if you start looking at this systematically and start reaching out to ourselves or others already, you're going to be well positioned. If you push this on the future, you might be in the risk of not actually being fully compliant with the mandate, and or being at risk for having inadequate procedures as that goes live. And that's really the information that I had to share with you. If you want to know more about this, we have tons of resources in the region. We have an office here in Media City. Just reach out and we will guide you further when it comes to these e-invoicing requirements. Thank you.
Thanks a lot. Thanks a lot. That's very, very helpful. I think it is very, very clear that compliance is going digital and trade is going frictionless. So obviously, it's as you rightly mentioned, it is something that businesses need to be aware of. Businesses need to take it into their plan of action. I'm quite tempted to take a couple of questions that we may have in the chat related to this topic before we move on to the next section, if that is okay with you, Mr. Hansen.
Sure thing. We'll see if I can answer them.
Fantastic. I'm just trying to look for the questions. Okay. Team, or you want us to do the questions later while you are going through it? I think they're suggesting we do the questions later. Let's continue with the flow and we'll come back to the questions. Now, we move on to the next part, which is the final act of today's session. A conversation about something at the heart of the global commerce, cross-border payments. Now, it's a space which is undergoing dramatic change. I mean, new rails, new technologies, new expectations. And the people we have on this panel are right at the center of this innovation that's happening in the space of cross-border payments. Please welcome Mr. Sumit Arora, Managing Director, EMEA World First, Mr. John Casey, Managing Director, TaxReady.ae, and Mr. Tomas Ribeiro, Partnerships Lead at Zena. Quick note, Mr. Alex Macria from PayPal is unable to join us today due to some unforeseen circumstances. However, we have three great panelists on board, and so let's jump straight into the discussion. Okay, I can see Thomas, I can see Sumit, and I can see John as well. Sumit, if we can go with you first, a quick round of introduction, maybe?
Of course, sure. So, well, I have been part of the payments industry for 20 plus years now. Majority of my time I've spent learning about payments. I still call it learning because it's an ever-evolving space. For the last 20 years that I have been based in Amsterdam, I have recently relocated to Dubai to start the operations of World First here. For World First, for people who don't know, it is one of the largest payments powerhouse in the world. We support over 1.3 million merchants globally. It's a big number. We've transacted so far at World First alone around $300 billion of dollars, which we have moved so far, out of which $150 billion was just last year. This year will be probably even bigger. We, as a group, we have over 60 plus licenses globally. And mind you, these are financial license, which are even one of them is very hard to get. As a group, we have about 60 plus. We are part of Ant International, which is a big group. Also has brands like Alipay and Antom within payments, the ecosystem itself. And yeah, we are here in UAE now to start growing the business. I will be taking over the charge as the CEO for the Middle East business. And I'm very happy to be working with DCC and other ecosystem partners because our ethos are exactly the same. We believe that one company alone, especially when you are helping SMEs in international trade, is not good enough. You need to be partnering with the right mindset, people with the right mindset, the right companies, so that 1+1 can become 11, not 2. And that is what we believe in as well. And this is the reason I was very happy to take on when Arjun invited me for this webinar to come and share my experience, whatever little I know.
Fantastic. Thank you, Sumit. I'll pass it to John to give a brief introduction. John?
Sure, thanks, Arjun. So I'm the Managing Director of TaxReady.ae. So for those of you not aware, TaxReady is the tax and accounting arm or company under the VirtuZone umbrella. So we started TaxReady back in 2023. So, following the corporate tax announcement, as of now, at any point in time, we sit on between 10 to 15,000 SME clients for outsource accounting and tax filing. Obviously, that ramps up a lot at September and is ongoing. And look, I love being invited along to talks such as this because with that number of SME clients, we get very, very regular and vivid feedback from the SME community around and micro business community around, what's going on, what are the concerns, what's coming down the pipeline. So I'm very happy to be here to sort of advocate on from that point of view.
Thank you, John. I believe like what Sumit mentioned, what you were mentioning, we're all sharing the same vision, the same ethos. So I think it's good to have you here with us today. And last but not least, Tomas Ribeiro from Zena. Tomas.
Hey, Arjun and everyone here. Thank you firstly for the invite to speaking today. I'm Tomas. I lead the partnerships team at Zena, For those who are not aware, Zina is the leading payment platform in the UAE, licensed by the Central Bank of the UAE. And we particularly target SMEs with solutions to accept local and international payments, online with payment links and a gateway, and in person with Tap to Pay on iPhone and Android and the QR codes. So we have recently set up a partnership with DCC, which has been extremely successful so far, and looking forward to this talk today.
Fantastic. Thanks a lot. I'm sure this is going to be a very, very interesting panel conversation over the next 20 minutes or so. So, okay, let's jump straight into the discussion. Sumit, you mentioned
Yes.
1.3 million e-commerce sellers. That's
1.3 million sellers. Yeah.
1.3 million sellers. That's a massive number. Okay.
Yeah.
And I know there are a lot of these sellers are selling on global marketplaces, especially sellers from China and around the world. From what you're seeing on the ground, where do these sellers struggle the most when it comes to receiving international payments? Whether it's the delay, high fees, lack of visibility, or overall settlement complexity?
Yeah, it's a very good question, Arjun. I'll try to make it very structured. So there are three big points where where there are inefficiencies built within international payments ecosystem. So first is the speed itself. The second is the complexity, and the third one is inherent cost because of the speed and complexity which is involved in international payments. And when I talk about speed, the inefficiency or the speed actually comes from, and maybe I can actually share an example. A lot of time it happens that a buyer and seller which are located cross-border in different countries, the seller has shipped the goods, the buyer has actually made the payments. The buyer says that I have made the payment to you, the seller says I have not received the payment. The buyer shows him a screenshot of his bank, and the seller shows him the screenshot of his bank saying that, hey, I have not received it. The buyer says I've sent it. The payment is somewhere missing in the ecosystem. Nobody knows where it is, right? And then they start exchanging empty 940 messages, Swift banks here and there. And then probably in 6-7 days, if we are lucky, if not, maybe 30 days, somebody gets to know, hey, we located the payment, we've given all the KYC now, and the payment should arrive. So the inefficiencies which are built into this ecosystem where the payment gets lost, etc., is because of the corresponding banks which work between the channels, right? When the payment goes from buyer's bank to the seller's bank, there are multiple parties which get involved into it, and moving the money in means creating the risk, and every party which involves in forwarding the payment eventually to the seller's bank account does their own KYC of the payment, and hence the speed gets very slow because of these intermediaries which are linked into the movement of the money itself. The second thing is the complexity. Because there are so many intermediaries involved, there is always a cost as well. And it is but obvious that if the more parties get involved, everybody has to make money, hence the cost will be higher, which is also the reason why you are making a payment within UAE, the payment is instant and free. But the same payment, when you want to send cross-border, the cost is much higher and it takes more time as well because of intermediaries linked into it and the cost which gets involved. The third part is sometimes even more important, which is a hidden part of the cost, which I call as the FX conversion cost. When there is a different currency involved, that time as well, there is a hidden cost of FX which gets involved, which sometimes the merchants see, and if they're mature, they actually see it, and sometimes if they are a small SME, they might not even see it. But these three elements, the speed, the complexity, and the cost of the payments, are the most important factors or the inefficiencies when it comes to the international payments. I may want to touch upon briefly how World First solves this. So from a speed point of view, we have, as I said, 60 plus licenses globally. And of course, largest companies in the world might have 2-3 licenses, etc. But we have 60 plus. So we have built our own rails, right, for moving the money across borders. When it comes to moving money, we can actually pay to over 120 countries in 90 plus currencies. So that is the rails we talk about, and 90% of our payments actually land up in 2 hours, and 95% of them in the same day, and majority of them the next day, right? So 95% is completed in the same day, even when it is an international payment, because we do not, as at most of the times, we might not even have to use third-party rails. We have our own rails built in. Because we have our own rails built in, we do not even have the cost challenge as well, because there is no third party intermediary involved. The cost of the payment can become very, very cheap. We are still setting up our Middle East unit, but in Europe, for example, a standard high street bank might charge 25 to 50 euros, for example, to send a payment. We can actually complete a payment which we charge to our clients just 4 euros. Yeah. So, and if there is a cost of currency involved, we can even make the cost of the payment as 30 cents. And so you can imagine the cost difference, right? For a bank giving a best cost as 25 euros and we doing the same payment for 30 cents. So that's a cost difference which you can have. And when it comes to the forex part as well, because we are moving such a huge volume of money across, the cost of the FX which we can drive down is actually sometimes 5 times cheaper than a high street bank. So this is how we actually solve the entire pain points of large SMEs, which are operating multi-currency, multi-country with multi-currencies, etc., to have a better ecosystem available to them for international payments with World First. And that's also the reason why over 1.3 million SMEs actually have chosen us, and we are growing at 100% plus over year and year. So it's yeah, pretty good system which we have brought to the market, solving the inefficiencies within the international payments.
That's great to know. That's fantastic. I think globally, I mean, you're solving a problem that is impacting SMEs and helping them realize the value much faster when it comes to the payment, the remittances, etc.
Yeah.
Now
So
that
one thing which I would like to touch upon, Arjun, which is very interesting, I only talk about the payments out. What we do very interesting was on the collection side as well. To any SME, even if it's a one-man company SME or two people, whatever, as small as that, we can actually give them an account to hold currencies in 23 denominations. So 23 currencies. So let's say a company is based in UAE, and if they are selling on Amazon in US and Amazon in Europe and Amazon in Hong Kong and Australia as well, 4 countries, we will give them local currency collection account in USD, Euro, Hong Kong dollars, and Australia. And all of these 4 accounts will be based domiciled locally. So US account will be in US, with it will come with an ACH code. A Euro account will be an IBAN code starting with NL or with IE or with DE if it's in Germany. Australia account will be in Australia itself. So when your supplier, in this case Amazon, is paying you, yeah, they actually will not make you a cross-border payment to UAE. Yeah,
okay.
they will actually make you a payment locally within their own country itself. So the money comes to you in 1 second, instantly. And once the money is in your Australian account or Euro account, you can pull it back to your UAE accounts, for example, within split seconds.
I think that's a great thing. I mean, look, this is SME enablement at a whole different level.
Yeah,
But
yeah.
bringing the conversation from the global SME scene to the UAE and the regional SME things, and that's what I want to hear, like Tomas's comments on how do you see like businesses adapting to like the instant payments? Like, what are the challenges? Are you also seeing common challenges highlighted by Sumit? What's your take and Zina's take on this one?
Definitely. I think I relate a lot to what Summit mentions, mostly when it comes to the costs involved and the speed of those transactions. So the adaptation to online payments is partially split. It's definitely acceleration, but still uneven at the moment when it comes to businesses that are already operating online or more traditional businesses like retail, salons, that rely more on in-person payments. Those are mostly blocked by the setup processes and how lengthy those setup processes are when wanting to set up new payment methods. Those eventually become or are removed when they understand that there are solutions in the market like Zina, where you can set up your account within a few minutes and start accepting almost instantly. So this is obviously one of the biggest pain points and I have a very curious use case of one of our biggest clients, which is a restaurant owner that was literally in the taxi going to the opening of his new restaurant, and the POS machines were delayed because of all the bureaucracy process that was still going on, and he didn't have any solution to accept payments. So he just did a Google search for tap to pay solutions in the UAE. Zina popped up. He downloaded the app, signed up. By the time that he was arriving at the restaurant, he could already use his mobile phone to accept payment. So this is one of the situations where technology comes to beat the legacy processes of the traditional banking, which still require a lot of documentation, which obviously, don't get me wrong, but making sure that the business has eligible and legitimate operation is the core of every fintech worldwide. But there are a lot of processes that can now be optimized, a lot of compliance that can be optimized using different technologies, even AI, which recently became a very world-spoken new or emergent technology that operates in the back end, trying to understand all of the transaction behavior, trying to read all the documents that the business provides, trying to accelerate the process so that we can focus on a good user experience to the customers. So I will sum up with biggest pain points that we see. Definitely the limited or the slow period of setting up an account, the costs that are involved with operating a POS machine, setup costs, acquisition costs, like all of those that can be removed when you don't need any additional hardware and your phone can start working as a POS machine nowadays. And particularly for SMEs, the settlement periods as well. Samit also mentioned, it is relevant to have quick access to the funds, not only from a reconciliation perspective, but also when you are an SME and you need to bootstrap your business by reinvesting the funds that you receive through customer payments, you want to have access to those payments as quickly as possible. And it's the industry standard is still 5 to 7 business days. When with solutions like Zina, the money is instantly settled into your digital wallet, and if you want to have it available in your UAE bank account, it will take less than 1 business day for it to get there too.
Fantastic, Thomas. I like the story that you related. So Sumit spoke about the e-commerce spectrum. You spoke about the POS machine, and retail. So we're truly talking about omni-channel commerce over here, right? And these problems that both of you stated, I think, yes, we understand there are challenges still, there are processes that need to be optimized. But the good part is there are organizations such as yourselves who are trying to change the game, trying to bring in innovation. You touched about embedding AI, and I was reading somewhere, I think the biggest implementation of AI is in the financial services sector. So we are very, very hopeful that with the right adoption of technology and with the right legal frameworks in place, businesses would be able to seamlessly trade cross borders. It's going to be fast, it's going to be seamless, and it's going to be dispute free, something that Sumit earlier spoke about. Dispute resolution also sometimes take a lot of time. That brings me to the angle of compliance, and this is where I want to bring in John. We talked about the payment part with John, but businesses, they need to navigate the VAT, the digital tax compliance in the UAE. From your experience and from TaxReady's experience, what are the challenges that the clients are facing moving from the paper invoice to the digital invoice? I'm sure you must be talking to clients who are coming to you for advice how to navigate this. So tell us, so what's happening?
Yeah, thanks, Arjun. So I think there's a bit of a misconception that a small business means a lack of understanding or a lack of compliance. I mean, every one of our clients tends to be a pretty tech savvy, entrepreneurial. They understand that they have compliance obligations and they want to do that as efficiently as possible. I mean, if we just look at the idea of paper invoices, right? Now, I deem when we say paper invoice, that includes, writing up a PDF on Word writing up a Word document and sending it on PDF over email, right? That's still a paper invoice. Now, you'd be hard pressed to find any of our clients that still behave that way or that still operate that way. I mean, 99% of our clients who are small businesses, for example, under that 50 million threshold, right? They are all onboarded with accounting software. They already issue their invoices through their accounting software, or at least issue them out of their accounting software and go forward there. So in terms of implementation or adopting things like e-invoicing, I don't have a huge concern for our client base in terms of the actual implementation. I mean, we work very closely with the big accounting software providers in the region. So, Zoho, Wafik, we've got thousands of clients on each of their platforms, and so specifically on e-invoicing again, we're working very closely with these software providers as they become accredited providers for e-invoicing to make sure that our clients don't have to change their behavior. They just continue doing what they're doing. An entrepreneur doesn't have time to learn about the four corners, the five corners of e-invoicing, right? They just want to know that, okay, well, does my current thing do what it needs to do now? And we'll be saying, hopefully be saying yes, right? And so the concern that I have for our client base, it's the same as when corporate tax came in. It's around misinformation, right? So the questions that I get are always someone, a business owner has come to me and said, "Oh, I got this email, this marketing email that says that I need to choose an accredited service provider today," right? And we have to go through and explain to them, "No, you don't have to do that until March 2027. Good to be informed by right now." And we'll have that conversation about, I don't want to contradict Pontus, but not leaning back and doing nothing, but just making sure that they're on top of what needs to do and what providers will be coming down the pipeline. But the idea and what everybody is aiming for, especially these big accounting software providers, is that it's minimal intrusion on how they currently operate. And our aim is obviously that none of our clients will incur any additional cost. They'll just continue their existing operations, issuing invoices through their software, and nothing changes.
Okay, thanks a lot. I think the earlier session, the topic about the e-invoicing, to understand more about the requirements, I personally feel businesses would still need to understand it, but as you rightly mentioned, for them, rather than going into the complexities, they would look for a partner who can simplify the process and help them remain compliant. Moving on, I think since we touched upon the e-invoicing part, I mean, Sumit, coming back to you, World First is now in the UAE. How is this e-invoicing requirement impacting your ability to support the international sellers in terms of managing the cash flow, reduce FX exposure, and basically like simplify the whole reconciliation for cross-border transactions?
Absolutely great question again, Arjun. I think the likes of World First products, become very relevant, and actually even more relevant for the market now when the e-invoicing comes in. And I will not spend much time on it and make it very simple. Let's say a seller which is based in DCC, which is doing its taxation, of course, in dirhams, because FTA needs to be paid taxes, etc., in dirhams, who's buying goods from, let's say, China or India or wherever, whichever part of the world, in a different currency, and has to make payments to his suppliers in USD. Yeah. So a Chinese counterpart which sends him goods needs to receive USD from them. They sell in, let's say, in Europe on a different marketplace from UAE. So they are receiving euros, they report in AED, and they pay out in USD. So three currencies are involved in this process. Now imagine this person is getting euros from a marketplace like Amazon. Let's say they even work with TikTok. So TikTok also sends them euros, etc. So all the money that comes in euros, has to be properly reconciled. Tax has to be calculated and has to be paid in AED. The same company has to also pay out has to pay out the incoming invoices, which are actually in USD, but they earn the money in euros. Yeah. And whatever deductions they do, and they have to do their reporting in AED for the taxation part, they have to deduct that from the AED itself. So three currencies involved in all this process. A company like World First comes in, and for USD it's very simple because the economy has hedged dollars against AED, but currencies like euro, GBP, etc. are still open. A company like World First can actually help this kind of a seller operating in UAE to get a forward contract, yeah, or operating anywhere in the world. Of course, we can board merchant entities across the globe in over 100 countries. They can actually make a forward contract, and even if the exchange rate moves, yeah, whichever side, we can actually bind your interest in your exchange rate against the currency you have made a forward contract with us, so that you are fully secured for the entire year on what exchange rate you can actually take in your favor for your business to actually get certainty. Yeah, this a very simple product can actually help them in their taxation, even if the euro GBP exchange rate moves, which has moved a lot, by the way, in this year, in 2025. If they would have worked with us, we could have actually glued it to one particular value, and it would remain for the entire year there, which makes the operations for the taxation very, very simple.
Now you've said something. I'm already seeing a few questions coming in the chat related to this. I'm sure people want to know more
Yeah,
about this, but
absolutely.
I will keep that for later. Let me quickly go to Thomas and ask him this, right? When it comes to we are on the topic of the e-invoicing, Zena is helping SMEs with combining e-invoicing with instant payments to improve cash flow, yeah, reduce reconciliation. What are the steps that you are taking as Zena? I understand Zena is not just I mean, Zena is rather a fintech company. That's how I look at it, right? So how are you helping the local SMEs navigate the space of invoicing?
So, as you mentioned, Zina is a platform built to solve the SME's pain points at a very practical level, and not only on the payments front, but also on how payments connect to operations. So this means, for example, providing SMEs with easy solutions to generate an invoice and be able to issue that invoice or easily send them to the respective client. And in terms of, I think, from the reconciliation perspective, the API that we offer will be the most interesting one, where basically you can plug your existing platform to Zena's API, allowing you to automatically generate new invoices to get the payments status update. So we see a lot of SMEs in the UAE still doing manual reconciliation, which obviously carries a huge lift in operational capacity and timing of doing those processes. So the moment that you plug to Zena API and you start automating all of those processes, you basically save time, save costs, and you will be able to have a way bigger operational efficiency just by implementing like a real-time automatic reconciliation process. So I would say that is the biggest feature that we have when it comes to the reconciliation part. Then on the settlement, also the instant access to you have for your funds. Now, when it comes to the e-invoicing, we are prioritizing for the first half of the next year all of the product updates required, so that then the businesses can automatically have everything reported to the local authorities. So the goal, this is not enforced in place, but the goal is once the invoicing starts being enforced, so that SMEs that are already using Zena, that can have all of this process automated. Ultimately, we want to make the experience as easy, as seamless to our user. So whether you want to use the app via our app directly or use our payment services via the API, everything will happen in the background so that the business can focus on their operations.
Fantastic, Thomas. I mean, automation is the way forward.
Exactly.
My last question to John. We talked about the automation, we talked about the compliance part of it, and you touched upon it, right? The digital readiness and the digital maturity of companies and SMEs in this region are relatively higher, right? I mean, you see it firsthand. And you mentioned earlier about that partner helping these SMEs navigate the complex e-invoicing space? How is TaxReady helping clients to reduce the mistakes in the whole process? Because we know mistakes are costly.
Mistakes are very costly, especially when it comes to tax. Look for us, it's all about the setup for a client. So especially when it comes to SMEs, a lot of these issues can really grow and sort of snowball if you get it wrong in the first instance. So the initial setup, choosing the right partner at the start, right, is so crucial for us. So we have clients who, I mentioned accounting software providers before, and maybe I'm promoting them too heavily, but we have clients who use Xena, for example, right? And they'll use accounting software for the accounting side, Xena for the payments, right? And it's just about making sure that you have the right setup with the right partners, and that is all calibrated correctly. So when you look at, Thomas was mentioning tax, for example, so is Sumit. So making sure that you have everything set up so that all the records are kept correctly to be usable in right currencies and currency translations to ensure that everything's correct. Exactly the same thing is going to be for e-invoicing. It's really working with your, in many cases, just working with your existing partners to make sure that they deliver something that is suitable for you. I mean, right now we're certainly not pushing our clients to go and find a separate or a new partner for e-invoicing if they've already got a payment platform and an accounting platform. Our expectation is that these two platforms, either one or the other, will be able to provide this service with minimal additional work or minimal additional cost. So, I mentioned before, we do sit on a huge population of small businesses, and so part of our job as their accountants essentially is making sure that we advocate with these providers to make sure that they have something that is going to be seamless for these clients.
Thank you, John. I think it kind of relates back to where it all started, Mitch talking about that whole ecosystem. And that's why ecosystem players and partners like World First, like Xena, like TaxReady, it's all about joining hands and trying to simplify business, because we understand the whole cross-border payments, the financial compliance, all of the space is not just evolving, it's accelerating, it's reshaping how businesses scale, how customers are transacting, and how the global digital economy connects. Thanks a lot to all our panelists for the insightful and truly forward-looking discussion. Now I'm told there's just like 1 minute to the end of the scheduled time. I mean, this conversation can continue. I have seen a lot of questions coming in. I assure you, every question that has been received will be answered to. We will send out the questions to the panelists and to the other guests on the show. We will get the answers and we will respond. So, final closing remarks. What a fantastic start to Tech, Trade, and Trends. A big thank you to Mitch, to Pontus, our panelists, Sumit, Thomas, and John, for sharing the knowledge. It genuinely moves the conversation forward. And to all of you who joined us today, a big thank you. You are the reason we created this series. I'm sure some of you may say, okay, the questions were not answered. Trust me, every question will be answered. We look forward to welcoming you to the next episode in January, where we will dive into new topics, understand new trends, and continue to explore the world of digital commerce together. So until next time, keep pushing boundaries in tech, drive trade forward, and shape tomorrow's trends. This is Arjun Sarkar signing off for today from Tech, Trade, and Trends. Thank you.
Thank you, Arjun. Thank you, everyone.
Thank you. Thank you,
Thanks.
everyone. Bye-bye.
Bye.